One of the most significant trends in the Irish commercial real estate market last year was the sheer increase in investment volumes, with a significant increase in the number of overseas investors and indeed Irish institutional demand for the commercial property and the loan sales that came to the market. In total, there were 96 investment transactions of greater than 1 million in value completed, totalling between them 1.78 billion. On top of that, there was another 750 million of Irish loan sales, bringing the total size of the market to 2.5 billion, a very significant increase in liquidity in a very short space of time. We expect to see an even higher volume of transactions completed in the Irish market in 2014. There is some concern at the pace of deleveraging and the extent of property that has to come to the market. So while it's important to feed the demand that's there from Irish and overseas buyers, at the same time it's extremely important that supply comes on stream on a controlled basis. Investors are encouraged by the extent to which values have fallen from peak. They're encouraged by the rental growth that's coming through in some sectors, and they're encouraged by the further potential for further yield compression, which is likely to come through over the next while. The pace of yield compression over 2012 and 2013 has been phenomenal. It's our expectation that the pace of yield compression will now ease somewhat, particularly as yields in most sectors are either at or close to their long-term averages. Over the last number of years, investors have played it safe and invested in dry, income-producing investments. We expect to see that changing somewhat, just as we're seeing in many other locations, where investors will move up the risk curve somewhat into more secondary assets in order to generate higher returns. We also expect to see an increased focus on non-traditional investment sectors, moving away from the office and retail sectors towards more non-traditional sectors such as student accommodation, healthcare, etc. We would also expect to see the multi-family residential sector becoming a mainstream investment class in Ireland. Indeed, it accounted for about 9% of all investment spend in the year just gone. With more and more overseas entities looking for opportunities in Ireland, we expect to see more partnerships and joint ventures from overseas buyers, who once were the competition but are now potential partners. With development likely to kickstart in some sectors of the market, such as the housing sector in Dublin, such as the office sector and the hotel sector, the re-emergence of forward funding is likely to emerge this year, with private equity firms likely to be the main suppliers of the funding. There's also going to be more competition between banks, with many international buyers bringing their own banking with them from outside of the jurisdiction, and huge appetite from non-Irish banks to get exposure to the Irish recovery story. We're also likely to see some further REIT vehicles emerging over 2014. The market isn't large enough to sustain a large volume, but we would expect to see some Irish entities converting to REIT status over the course of the next 12 months. And with more indirect investment in the Irish market, we would expect to see some of the existing REIT vehicles undertaking further rounds of fundraising over the course of 2014.